Good morning, everyone. It's Dr. Stock. I'm back. I'm ready to rock. I got some exciting information for you concerning renewable energies versus our conventional fossil fuels that we were using. And we got a lot of mixed headlines coming out recently. So, first of all, we have this big movement going in renewables in which the world is trying to find more ways to be greener and cleaner, especially in the face of climate change. And then when you look at the traditional ways of fueling the world, we have oil and natural gas and coal and all these ways that are really taxing on the environment. And really, what we're looking for is a way to just be greener and cleaner overall. And for me, you should know two things about me. I have two fundamental beliefs as to what we should do while we're here on this planet. And number one is actually environmental, because if we don't have the environment, then we don't have anything. So this world, whether we want to believe ourselves separate from it, we still exist upon it. And if we mess it up, then we mess it up for ourselves and everybody else. The second thing is community. So as long as we are going to be here, that way that we form relationships and we manage those relationships with each other is absolutely enormous and huge. So when we talk about like ESG plays, so environmental, social, and corporate governance plays, I totally 100% stand behind companies that are environmentally responsible, and for even if they're ones that currently have some sort of inefficiency, environmentally speaking, if they're putting serious progress towards cleaning up their carbon footprint and really moving more into that renewable space, then that's something that I can really stand behind. And also social, so finding socially responsible companies as well. These are things that are huge to me because I care so much about people. You should know that as an educator, trying to have everybody find their power and their place in this world and the things that they can contribute to it and having them feeling valid and worthy are all things that I can stand behind. Anyway, I'm going to move on from there. I want to get on to what I have for you for renewable energies, and for me, I really like the where the solar stocks are positioned right now, and we'll talk about what's going on in the news and then also what's going on movement-wise, and then where things are heading and some of the limitations that we face. So I'm going to keep this quick, clean, and easy for you. Let's get right on to the stocks. All right, so what got me onto this one as I was currently doing my crypto updates, and I saw this news article here that says crypto market maker GSR goes carbon neutral, including for its Bitcoin mining business, and they absolutely want to put that out for PR reasons because Bitcoin recently was, we'll say, outed for being very dirty because of a carbon footprint wise because of news that we got out of China and Elon Musk's infamous tweet about that, and Tesla no longer accepting Bitcoin because they also want to be seen as a green company as well. And so going into Bitcoin, which would take a lot of energy and thinking of it as using a lot of fossil fuels and coal especially being especially bad for the atmosphere, this is something that GSR wants to put out there. So we have this movement, and there's a lot of people and businesses behind this, that what we're doing is we're putting momentum into the renewable space. So then I see this article out here on Seeking Alpha, says oil and gas continues to trounce green energy. And all I'm going to say to that right now is, of course it does. Oil and gas, these are ones when you look, even if you listen to anything Cathie Wood has said about what we have for innovation, is that we're going to have different types of deflation. And so one of those types would be through in the face of innovation that we see deflation or rotation away from these fossil fuels, these old types of energies that aren't necessarily environmentally responsible, and looked for more and more renewable energy types. So when you look here, it says oil and gas ETFs continue to march to the top side as they inversely trade against many green energy related items. You should know that as we get out of that pandemic, and so these recovery plays and these we'll call them legacy energy plays, they're going to continue to move upward, because right now we are using oil and gas. Even if you just think about the transportation industry alone on oil and gas, the fact that people are traveling more, and that and we have the airlines putting out more flights, there's going to be more of a demand on that. That's going to increase the prices on it. And then what else happens as you have that recovery? We also have inflation fears because the money printer, and then the green energy companies that are still up and coming, that are still, a lot of them, very much growth plays. They ended up selling off and being devalued. And so when you talk about them trading against the green energy related names, yes, that would be obvious for anybody who's been following this. So when you look at these, and they say about energy stocks and how they're performing and everything, when you look down here, it says oil and gas is currently trending upward as crude oil hits highest trading levels in more than 2 years, dating back to October 2018. So for people who are in oil and gas, listen, I own Chevron. They're in my dividend portfolio. I think that oil and gas, these companies have still a lot of room ahead of them, and I think that they're going to be, I don't think they're going anywhere anytime soon. I think that we have at least 10 to 15 years before we really start to see a heavy pullback in those, and during that time I think that we're going to see that either slow and steady growth, or we'll see some growth periods, and then we'll see some bigger spikes where renewables really kind of take over for a little bit. But I think it's a long way off before they take over completely. I think that governments and companies first, I think, are starting to get really aggressive on green energy. $198 billion to support oil, coal, and gas in January 2020 and March 2021. And then when you look at clean energy, $147 billion. So that expense that we have, yes, there's still a lot that's going to those old fossil fuels. However, we have a large amount going to clean energy, and I think that's a balance that that's going to shift over time. That we're going to see rotation away from oil, coal, and gas, and a rotation into the clean energy space from those governments. Remember what I just said, that for these countries, for the governments that are running them, they are not. They're becoming more aggressive, but they're not as aggressive as they could be yet. And I think that just takes time. You can't really knock out the pillars of your infrastructure without having some other support in its place. And right now, clean energy and the green space, it's getting stronger. It's just not quite there infrastructure-wise to completely replace oil, coal, and gas. So when you look at the investment community, again, this is more obvious information. I want to move on from there. And then they say about the energy select sector in the Spider ETF for XLE. Scroll up so we can see it a little bit better. When we look at those, we can see just a brief snapshot of those, but I want to scroll down. This gets better. So here we have a graphic. In the blue, we see XLE's performance, and in the yellow, we see the iClean, or the ICLN performance versus the S&P. And so when we're looking at that performance, look where it splits off. It splits off back in February. That split happened when we had that sell-off with those high growth plays, the high multiple stocks, and then where did the money go? The money went into value stocks, and the money went into recovery plays. So when we see this split, it almost seems as though they're trying to say, hey, these fossil fuels, oil, coal, and gas, those are ones that stand to increase over time. I don't think that this article gives a really good view of what we're looking at, however, explains a little bit of what we're seeing in the markets. It is factual, but it's myopic. It's very limited. And then when you look at green energy, yeah, they sold off, but they weren't down a whole lot. And when you look at these values that you had in their performances, we had a lot of strong days right in a row. However, we still have those inflation fears, and also renewables are a growing space for us. It doesn't mean that they're an established one. We don't have the same establishment that we have in oil and gas here with the green energy, which has just been moved on. And I remember being in my preteen and teen years back in the 1990s and hearing about green energy and about pollution. We talked about pollution a lot. And right now, I think that, me being in my late 30s, that we're finally starting to see that movement come out of the education that we got in the 90s, and that need to take care of our environment better. I think we're finally starting to see the results of that. So it's taking a while to make that movement happen, but it is moving. All right, and then just this morning, 7:45 a.m., you can see Fed's says does not seek climate policy for the U.S. So that's when you read what he says. Now, people who would look at the headlines only, it's like, oh man, the U.S. It doesn't care about having a climate policy. Well, when you look at what he says, climate change is not something we directly consider setting monetary policy. So for this one, please try and imagine a difference between the governmental policy and monetary policy here. So for him, for working as the Federal Reserve Chair, central banks can play an important role in building an analysis to quantify the risks, but we are not and we don't seek to be climate policy makers as such. And honestly, I think that's a really good stance for him to have, because they're finance people. They shouldn't be making climate policies. Yes, quantifying the risks and also putting in the different analyses and stuff, like on the business end, on the investor side, maybe they can speak to that as far as the money's concerned, but really them being the climate policy makers doesn't really seem to be a responsible move by them. So for me, coming from an educational background, having politicians who have never worked inside of a classroom and like been down in the trenches and seeing what exactly goes on and knowing what it takes from our experience and what it takes to actually inspire and educate the kids that we would have. If you haven't had that experience, trying to make educational policies just feels synthetic, and it just seems to kind of miss somewhat of the importance on what exactly needs to take place in order for the desired effect to happen. So I'm okay with the fact that the Federal Reserve isn't trying to be a climate policy maker. I don't think that that's their place. However, I think that when you have committees with experts that actually deal in clean energy and green energy and are forward thinking and have a pulse on what exactly is taking place in the world right now, those are the people who I think should be deciding on policy, not people who would work at the Federal Reserve who are interested in monetary policy. So I don't think that this is totally negative, but I can see it being skewed as negative towards clean energy. So here's another article that we have. This one goes all the way back to May 24th. Solar power stir of rapidly declining costs thrown into reverse, coming from Bloomberg. Starting with this one right here, a quadrupling in the cost of polysilicon has pushed solar module prices up 18% year to date after plunging 90% over the previous decade. So I don't have those numbers, but let's just say that it costs $100 for, I don't know, a kilogram of the polysilicon. So if it dropped 90% from there, that means that it cost $10 where it used to cost $100. And then being up 18% year to date, that 18%, that would be like $1.80 on top of that $10 that it currently costs. So it's not that 18% up isn't taking us back up $18. It's taking us up much less than that. Now, mind you, if there's higher demand and there's still a limited supply, there's still going to be that price increase on the polysilicon. So when you look at that, it could be a little bit misleading. And look what they say: a reversal that threatens to delay projects and slow the uptake of solar power. Yes. It is something that's going to be concerning when the companies have to pay more. It's going to cut into their margins. They're going to make less money. So as investors, that can be troubling for us. And you can see the different prices that they have down here, saying about the makers being unable to keep up with the demand, lifting prices, and then they give a range that we have, so from $6.19 up as high as $25.88 per kilogram. We don't know how long that's going to keep up, but if you look what they say that they expect prices to remain elevated through the end of 2022. Remember that this green movement is not a short-term movement. I think that overall we're going to see the supply chain issues even out over time, and then we still have ways to innovate over that. So Bloomberg, I think when they're with this article that it might put the brakes on, but I think again that would be a temporary thing that's going to ease out over time. They also mentioned some other, there we go, prices for steel, aluminum, copper also surging as freight charges and solar microinverter supply. Enphase Energy has warned that expects shipments volumes. And then it mentions the semiconductor shortage, which again we know is something that's temporary for us. So semiconductor shortage, we will adapt to that, so that way we have the semiconductors that we need. And then also as as we leave some of this temporary inflation period for things like steel, aluminum, and copper, we know about the supply chain issues, but we also know that those supply chain issues should smooth out over time. So the prices that are increased right now are things that are going to be temporary, they're going to be passing, and then they will smooth out over time. And they do give us a bright side. The interruption long-term downtrend in the cost is partially offset by continued improvement in efficiency of solar panels. I think that the theoretical limit is about 30% efficiency from the from solar panels, and the rest, the other 70%, is lost to heat. So when you read about this, that approach is only up to 30%, and I believe there's things called perovskite crystals that they're currently working with that help capture some of that, more of that efficiency, and it's like a two-layer solar panel, if you will, where they use the perovskite crystals over top of the silicone that they have in the solar panels in order to make that take place. So moving on from there, I just want to show you this. It says U.S. energy consumption in 2020 increased for renewables and fell for all other fuels. So when we look at this one, we have petroleum, natural gas, and then renewables, and then coal, and then finally nuclear. And this is a quadrillion British thermal units, or BTUs. So 92.9, we'll just call it 93 quadrillion BTU. So this is above the trillions that we have there. So when you look at this graphic, what you're seeing is the source, where the energy is coming from, and then where it's going to. So you have the electric power sector, which then feeds into industrial, transportation, residential, and commercial. And then you can also see coming off of each of these the direct links that we have from the source to the end use sector when we look down through those. If we just look at this paragraph that we have right here, it said we recently updated our U.S. energy consumption source sector chart with 2020 data. And this does come from today, so June 4th, 2021. And if we look here, there was a record decrease from 2019, of course, with the pandemic and the slowdown that we had with all the transportation and everything like that, and the closing of businesses and everything. It is expected that we would have some sort of decrease like that. And we see a consumption decrease for all fuels with 2019, except renewable energy, which increased by 2%. So we had an increase in renewables, and then petroleum decreased by 13%, natural gas 2%, decreased 19%, and nuclear electric power decreased by 2%. So the renewables kept on championing its way through there, which is a good thing for those of us who care about green space, and I believe as long-term investors we should. All right, so just a quick look at Invesco Solar. So this is the TAN ETF. When we look at this one, ticker symbol TAN, and when you look at the daily, this is the weekly chart. Let me go to the daily chart. There we go. So taking a look at the daily chart, you can see that this thing bottomed out around $67, almost $68, and then recently had more of a run-up and then a sell-off again. We're still under the 200-period moving average, and in the face of economic recovery, we see the pickup in more traditional fuels, and so the renewable space, to see that sell-off is completely understandable. And then we also have the supply chain issues taking place right now. I think with a lot of the solar plays that you have, take your pick on the big solar companies, and I think that you really stand a chance for a lot of gains down the road as those supply chain issues ease, and as we start to see enough of the economic recovery play out, that what we'll see is that over time, oil, coal, and gas are going to slowly fade, and then we're also going to see that slow takeover from the renewables as we continue our momentum. Remember, it is a social movement, and social movements, especially when you see it go globally, are very powerful things. So we have some heavy resistance right around the $80 mark when we look at this one. When we turn this thing around, breaking that $80 mark could take significant energy, so just be on the lookout for that. But it is something that I do want to put on the horizon for you when we look at solar. So here, let's take a look at some of these plays. Here's I believe a smaller one, Sun Power, and you can see it's been trading sideways but slowly up for a while. There we go. So back to the TAN ETF. When we look at this one, we go farther out, we are back to prices that we saw in October of last year. And so these prices, while elevated, they came way off their highs that we had at $125. So from there, we've come back $50. So we're back about 60% to about 60% of the price that we had before. And I would say that these have been significantly de-risked from what they used to be. So this is something that So this is an area where I think that there is a lot of value going forward, that if you're looking for cheaper places within the stock market, I would consider the solar space, because I think that that's one area where we haven't seen the amount of recovery that we should expect to see. And I think that it's a company that still has a long way to mature ahead of it, and where the supply chain is something that's really putting downward pressure on the stock prices in the meantime. And I'd be remiss if I didn't mention Enphase. So when you look at Enphase, again, a very similar chart. It was trading down near, almost pushing down almost to $100 a share, where it was up to almost $229 a share. So the nice thing here, when you look at the 200 period moving average, not only, and this is the 200 EMA, so when we look at the daily chart here, we're trading above it, but it looks like we're also kind of being capped off by this 50 period simple moving average that we have. So we have support and we have resistance, and they're starting to squeeze on each other. And so right now we still have a slightly positive but almost flat slope, and this could continue to act as support for us. This could continue to act as resistance. I think that we're coming up on a breakout one way or the other, but time will tell, the news will tell. I think macroeconomics are going to play a huge part in what happens to take place with the solar companies like Enphase. Enphase, of course, makes the microinverters for those solar panels. So let me summarize. Clean energy, green energy, it is a huge movement. Governments are moving into it, that they're setting these goals for getting more into the clean energy space, and yet what we see right now with economic recovery is we hear news of these old ways of fueling our world, our technological world, but it's butting heads right now with the social movement that we have with clean energy. So right now, the right now money, I think, is in oil and gas. And if we're looking at the tomorrow money, I think that it's in the renewable space, where you're trading at, even though they're high multiples for the companies right now, I think that those are going to cheapen over time as we move more and more into the renewables, into the green energy space. So I'm really looking at solar as an area where there's still a lot of opportunity ahead of us. And right now, while we have such downward pressure on it and it's holding those prices down, and we've seen the big sell-offs, and we are still down near those big sell-off prices, there's been a lot of risk removed from the solar companies. So from here, if all that fear, uncertainty, and doubt that we had pushed down these solar plays as low as they have, we're looking at about the lowest, in my opinion, that they're going to trade. And this is not financial advice. I am not a financial advisor or financial expert. However, I wholeheartedly believe that if we're looking for value, that we're going to find a lot of value in these solar plays, and at a fairly minimum risk, because we've seen a lot of the sell-offs already. We've seen their prices be pushed down. I don't believe that they're going to be pushed down further than they are right now, and if they do, I don't think that it's significantly so. So we have limited downside. However, with the Biden infrastructure play and other global influences that we have moving into renewable energy, I think that we have a lot of support from on the bottom of this that will keep the companies from trading lower than they currently are. That's what I have for you today. That's what I have for you today. If you guys want to check out my Patreon, that link is down in the description. Also down in the description is a link to WEBULL. That's the trading platform that I show in my videos. So if you go over there and sign up and deposit $100, you get 2 free stocks valued up to $1,850. I get 2 free stocks for the referral. It's a way that you can support the channel while supporting yourself, and it costs you absolutely nothing, and you get free stuff from it. And you're also not spending any money on me, so I don't know how you feel about that part of it, but you still are supporting the channel anyway, so that's absolutely incredible. If you want to subscribe and hit the like button, that's also free ways that you can support the channel. It helps to move these videos up through the algorithm, and also make sure that you can see when these videos come through, especially if you click that notification bell that lets you know anytime that I put these videos out. I'm also moving into more live streaming, especially for the market open. I'm improving the hardware that I have to work with in order to do that, and so it's going to build up over time, and it's also something that I'm pretty excited about. So you guys can come and you can talk to me live while I'm doing those broadcasts. If you join my Patreon, I have a Discord over there where, again, you can talk to me in person, one-on-one, and you can also chat with the other patrons that are over there. All right, I better move on from there. Thank you guys so much for stopping by. Remember, these videos are for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.